And good evening, and welcome to the Market Watch Group Trading Foundation's working sessions. Remember, as we do these, I always want to point this out that there is in the content library a full Trading Foundations series and a Options Foundation series. There's actually two iterations of options. I need to put the second one in there. I have some maintenance work that I need to do. I'm making notes to myself and prioritizing my work. Content library maintenance. So we originally intended to just kind of cycle through. So when someone new came on, they could jump in the cycle. But my thought is, you know what? Let's just come in here and work. We ask questions. This is your ability to ask. So I don't want you to think I have an agenda. I have slides to kick us off, and then we go to the platform. This is where you should be asking questions, and the questions lead to rabbit holes, and it's a working session. If there's nothing going on, I'll always just be like, great, let's just start talking about the market, right? We'll start at the SPY. We'll look at the things that we look at. We'll start getting in the watch list. We'll see if there's something that's worth trading. That's what we've been doing. We've found a number of good trades. I've taken every one of them, and I think they've all worked out. I guess I need to make a better note which ones come live from the foundations class. But this is where you should be thinking, hey, I'm stuck, because if you were going to write the question and ask a question, or you were going to go to the beginner's corner to see, come here and ask the question instead. Hey, what about this? Or come here and say, hey, is there any chance we could look into a concept? Are you having a hard time pulling the trigger? Do we need to talk about like the psychology behind taking the trade? Great. Throw it at me. That's what a working session is for. We don't know. Let's just start working and see where it takes us. And as the market changes, as people come in and out and talk about different things, then it's just going to flow as it may. That's my thought. So let's dive into it. Disclaimers. I don't know why what's going on with my slides? They seem like disproportionate here. I'm not sure. To the platform. Oy vey. Nope, we're not doing that yet. Oh, I tried to save time by combining the two. I didn't like how that functioned. I forgot that I had done that. Okay. Let's work. Let's get a chart. Okay. What are your questions? Let's start with that. I'm getting my chart ready for us. I would like to know what questions you have. If you're a beginner and you feel like something has impeded your progress, a speed bump, or any other type of obstacle that's getting in your way, what? You'll see here, nice looking trade setting up on Walmart. Nice trend. Higher high, pullback. Is this something I'm looking at? Absolutely. It's in Heikin Ashi. Let's switch it. Stochastics is pinching but hasn't turned. Candlestick hasn't taken out this high though. So it's basically right at that level. So I'd say that's viable to look at. I'm just going to throw some symbols out there. We'll talk about them. Apple. Yeah, that's an interesting one because the stochastic says, oh, look, it's getting ready to shoot. And you're like, wait a second. It had 1 day consolidation, then it went higher. Now it looks really, I can't trade this. That to me is not a signal I would trade. If I were expecting a bull flag, I mean, I would think more like this, and then I'm trying to catch it as it breaks out. And then this would make a lot of sense to me, and I would absolutely think this looks great. But that's not what it looks like. It looks like it popped up, and now it's kind of stalling a little bit up here. I don't know. AMD. I think this is exactly what we're hoping for. The consolidation has begun, but we're still kind of entering into this window. We're watching to see what this looks like. I don't know, 2 days, 3 days. We'll see. Definitely one worth watching. If you remember, we're like, I'm not going to do anything unless it breaks out of this consolidation. Well, it sure did. And it had above average volume. Great. But not yet. Amazon. Oh, Amazon looks close. Today it started moving, but it's still only right here. This is starting to pinch. We'll see what tomorrow brings. I would probably look somewhere around this level. If it gets above that, that would be worth saying, okay, I think that's our go. If it just sits, if it just kind of sits like, let's say it has like a doji, then I'd still wait for the next day to confirm. But I would actually feel better at that point, something like this. So I would say, like AMD, Amazon is definitely viable for a potential trade. I'm going to write down my favorites so I have my list ready. AMD, Amazon. Okay, let's stop. Is it helpful to just talk through the watch list like we're doing now? Is this helpful? Yes. Okay. I'll keep doing an unusual bull move on Shopify. Great. Let's take a quick peek there. Shopify. Oh yeah, definitely. Here's the situation with something like that. So unusual that for me it's untradeable, although would we have wanted to trade it? So it definitely is off its lows. You can see that it's not a dumpster dive, but at the same time, the trend was mostly sideways. I actually look at Shopify a lot like I looked at AMD. And now I would say this is giving us that smash and grab signal that says, and it might go higher from here. That's not what I care about right now. All I care about is that I'm saying this stock, the next time it dips, this is a stock that could trend its way back up to 90, right? And it could give us a lot of moves along the way. I just want to catch those. That's all I need. So when it pulls back and gives me the next higher low, I'm in, and every subsequent higher low from that point, I'm in. So I would say Shopify is now worthy of the watch list. It's been on our watch list before. Prior to this, I mean, it was in a fall, and then it got smashed, and then it was just down here dumpster diving for a while, and then it finally had like a real bullish push right here. Never really had a ton of volume, so you're still maybe like, I don't know. And you can see how it's just been flirting with the 50, above it, below it, above it, below it, above it, below it. And now it's the first time it's convincing, in my opinion. And it's not convincing of anything other than we've seen the buyers look like, and they're not done. Hopefully they actually do another day, a couple of days. Then we've seen the buyers and what they did. Then we have to watch and see the sellers. And that's this cycle here. Because if the buyers push it up and the sellers only push it a third of the way back down or a half of the way back down, those are Fibonacci retracements that people look for, right? That's all it is the buyers did this and now what are the sellers doing? Not as much. Oh, what does that mean to us? That means that demand is outpacing supply. Buyers pushed it. They took a little break. There was some profit taking probably, right? It just kind of pulls back a little bit. And then all of a sudden, bam, the races again. That's what we want. That's the story we're looking for. So when it's just going sideways, we're like, meh. But when the buyers do that first little smash and grab, it's like, okay, let's see if they can take this for a ride. Can they give me 3 trades in a row? That's what I would like to see after a breakout. 3 in a row. After 3, you start to feel like, right? 3 is what an Elliott wave technician would tell you is viable. 3 trades, and then it's going to cycle back down. I don't know if I necessarily believe that. I'm not an Elliott wave technician. It's a pretty good, Elliott wave is a pretty good technical analysis, but it's just like its own, it doesn't play well with others, right? It doesn't like mesh well. You either do it and that's all you do, or you don't do it, and that's the line. Okay. It's a good-looking stock at this point, though. Yeah, I think let's keep an eye on it. Let's keep building this. Let's keep building our opportunity list and maybe build one. We've got some time together. Because of this working meeting approach, I'm starting to catch on. Oh, the fog is clearing. Oh, I'd love to hear that, Lee. Right? I love it. Okay. I like to hear that we're onto it. Again, I will tell you unequivocally, my entire focus right now is onboarding our beginners comfortably. If you're new, I want you to be able to come. This is your haven. You get 45 minutes twice a week with 2 different people, unimpeded. So when seasoned veterans show up, I basically ignore them. I'm like, yeah, hello, it's good to see you. Now keep it quiet and let me get some work done here. This is your time. And so this hopefully can help bridge all the gaps. Ask your questions. If you don't have a question, I'm just going to start getting on my soapbox, talking. And part of what we're trying to do is the continuity, right? Like, hey, I'm managing a trade. I'm closing a trade. I'm logging a trade. I'm thinking a new trade is setting up. And it's just this ongoing day to day. A lot of moving parts. That's why we like to script it. Script our routines, which is coincidentally the section of the trading plan that you should be working on this week. Section 5. Are your routines strong? Rate your trading routine section. If it's less than a 7, it needs work. Between 7 and an 8, definitely could stand some work. If it's above an 8, okay. Now you're refining it. Once you get to an 8, it's about refinement. It may take time. Every 10 basis point increment that you improve your plan is going to be harder and harder, right? Because it's great. That's the challenge. Okay. Where were we? We were at ABGO. Not yet, but I'm setting up. We saw this enormous spike, and then it consolidated, and we said, hey, in fact, we did it in one of these sessions, right? We literally pulled right there, following the same rules we always follow, right? It's no secret. We said it looks like it's at a support level, and we think it could bounce. We actually said we would like to see if it could get to here. We capitulated. It ran out of gas. If you're in a plane and it starts running out of gas, you're not like, let's see if we can get there. You land the plane. I'm done. We took a piece, then it took another piece, and then we took the last piece. All of it in the same basic range. That's a good trade right there. Yeah? Now what? We're going to give it some rest, water, a little hay, and get that horse back to the starting line. Let's run again. This is not much of a consolidation here. I think that there's a window here that leads to a target here. I don't see why not. It's been there before. It's easier to get there when it's already been there. I'm not looking for a higher high. So I think we still have a nice 2-to-1 at a pressure release, 3-to-1 at the final target if we can find an entry in here. So I love it. It's not there yet, but it's setting up. This is going to be on this week's list for sure. Now, I want you to feel comfortable challenging anything in here where you're like, what? Why? People do it all the time. In fact, they were doing it to me because I kept looking at a sideways stock. I was trying to break a curse. It's a whole thing. It's a whole thing. You guys probably understand the need to break a curse. I mean, right? Come on. Can't have a curse on any individual stock. Unfortunately, I was not able to break the curse. It's still going on, but maybe one day. In the meantime, yes, definitely I'll pull up the Heiken Ashi. In the meantime, right now, all we're thinking about is the sellers have control. We can see it clearly. The selling cycle started when we got that little cross. That's a nice feature of an oscillator. MACD, stochastics, RSI. There's a lot of different ones out there. Mine is a slow stochastic, 7.3. What is the 70-30? That's just where this green line here is set and this green line here, which is kind of our overbought and our oversold areas. Nothing fancy here, right? Less is more when it comes to technical analysis. If you have 8 different oscillators on your chart, cut the fat. It's unnecessary. They're competing for doing the same job, and all it's doing is making your charts noisy, right? It's noisy. Get it clean. What do I have here? At the bottom is implied volatility. If you only trade stocks, you probably don't need this. and I wouldn't include it. If you trade options, absolutely essential information, which basically is, what are the options right now pricing wise? Are they cheap or not cheap? I don't bother with medium or, and it's not overpriced or undervalued. It's cheap or not cheap. If it's cheap, I'm willing to buy them. If it's not cheap, I'm going to do something else. That's the simplest way to break it down. What something else would be is some kind of a spread, maybe bull call, bull put, diagonal. No, diagonal is more of a low volatility. More like a butterfly, things like that. Anyways, cheap relative to itself. So this is representative of where it's been and where it is now. So where it's been is as high as 60. Back here, these options are expensive. You would pay, and I can't give you a dollar value because it's obviously going to depend on, right? It's going to depend on time and strike price. But what it means is you're going to pay twice as much for an option there time-wise as you did here. It's a pretty significant increase. So when you have options that are up here, you can't just buy them, because if you buy those options and then this volatility falls like that, you're going to get extra hurt when the option goes against you. So what implied volatility does for options traders is it helps steer you to the right strategy. When they're cheap, it's pretty easy to buy them. What it means is that what I'm paying for time value is low relative to the history of how much you've had to pay for time value in the past. So imagine if it's like a house in the last 12 months has cost anywhere from $200,000 to $250,000. Right now it's $210,000. All right, that's pretty good. I like to buy that house. If I knew it was $250,000, and it was if I'm like the highest it's been, it's $250,000, and right now it's at $250,000. I'm thinking, that doesn't sound like where I want to buy it, right? What do? I want to wait. In fact, I might even say to myself, I'll sell that house short. I mean, obviously you can't do that with houses, but we can with options. So does that make sense, David? Cheap and expensive. And so every stock is different. If you look at SPY, you're literally looking at the VIX. Let me pop that in real fast. If I look at the SPY, this is just like the VIX. Where's the VIX right now? Probably very close to 13.4. The lowest it gets down to is somewhere around 12. It's been up here around 20. Well, that's exactly what the VIX chart looks like. But where is the VIX right now? It's pretty low. What have we been saying about options? They're cheap right now. Overall, I expect more cheap options than not. Every stock is different. Now, if you start getting to stocks that are reporting earnings soon, like here's Morgan Stanley, as earnings come, you can see how volatility spikes up. And now that earnings are happened, that volatility is going to likely bleed back off. So what would I do with this stock? Number one, it's overextended, so I'm waiting for a consolidation. Number two, it would be great for this volatility to bleed off. And now the next time it gives a signal, I'm getting a bullish signal, and the options are cheap. If this volatility continues up here, that's when I'd be like, wait a second, I don't want to buy these. I want to maybe do a spread trade. So the implied volatility doesn't tell you whether or not you should take the trade. That's going to come from the price chart, the volume, the stochastics. This tells you if you've decided you're going to, how, as an options trader, would you best trade this? Hopefully that makes sense. So if you're not trading options yet, don't look down there. Just look at the stochastics. What do I have? I have volume with a simple moving average applied to the volume. That's this green line. That's important to us because it helps us to identify any days that have higher levels of conviction, where the daily volume shows us that the activity was higher than normal. We want to look at those days and be like, oh, who won that day's tug of war? Was that a buying day? The buyers yanked it. Was it a selling day, or was it a tie? And that is what goes into our weekly volume analysis as we look to score a ongoing assessment of market conviction. All right, stopping to see if there's questions. I don't know if you guys know the policy. The policy is simple. If you don't have questions and you're not engaging, it's because I have put you into a state of awe. You're like, oh, this is so great, Scott. Thank you. And I'm like, yes, I love it too. Just talking about the market. I don't know. Maybe I flatter myself. Sometimes my kids walk by and then after tell me I'm ridiculous with the things I say. I don't think so. Let's look for some more trades. Let's build this list. I think we have a strong watch list this week. Where were we? AXP. So, bottom line, AVGO is on the list. Sorry, that was a really long, slow way to get to the point. AVGO is on the list. AXP. It looks fantastic, very strong, like a lot of financials do. Unfortunately, you either got in them, stayed in them, but they are not giving signals right now. I want you to just imagine you're running to the freight train and it's barreling along and you're losing ground. Are you going to jump on that train? Maybe if you were running faster than the train, you'd feel comfortable jumping on it. But the train's moving faster than you. It's too dangerous. You missed the train. Relax. Head back to the station. Be patient. It's going to pull back. You're a spectator. And this one hasn't even reported earnings yet. So, yeah, keep that in mind as well. Okay. What else? Boeing. That's an interesting bounce, right? Like there's a strong bounce, higher, low. I told you I'm not trading it. I've declared myself a spectator, so it's interesting to watch. It's trying to keep on climbing. I mean, it's presented some opportunities. BAC, missed it. Earnings are coming up. It was today already. At this point with financials, I mean, even this one, this was the one we were watching, and you can see if you didn't have a signal ready to go, at this point, that's hard to get in. Caterpillar. Now, Caterpillar, that was a viable trade. It was under the 50, but it had popped up, pulled back, higher low. That's our signal. I don't care what stock you have. If you have that pattern right there, it's a viable trade. Now, would have I expected it to regain this high? No. To be perfectly honest, I probably would have looked for this previous one here. And that would have been a nice 3-to-1 trade right there, right? Something along those lines. However, let's answer the question about the Heiken Ashi candles. This is clearly in a momentum stage. Speaking of, if you go to the content library, there is a stages of a trade, 4 stages of a trade, pre-trade, the pre, now I'm all of a sudden blanking because I haven't done that presentation for a while. Waiting to develop. Right after you get in, what are you looking for right after you get in? The momentum stage and the nearing completion stage. The way that you look to manage risk, to tighten stops, to take profits is different in each of those 3 stages. So anyone who just manages trades exactly the same way all the time, for me, that's a mistake. You're not adapting. Early in the trade, give it some room, let it breathe, but watch to see if it goes wrong to cut your loss short. Once you're in the trade, you're looking to catch the momentum and then let it go, right? Maybe nearing the end of the momentum stage, you take a little bit off. You start tightening your stop, but not too tight. And then ultimately, as it gets to that nearing completion, that's when you start thinking about things like trail stops. You tighten your stop more, you take profits, you lock gains in, you manually close trades because the reward to risk just no longer supports staying in the trade. I promise that having a more specified and granular trade management thought process, you're going to get more comfortable with how you're managing. Those are the hard decisions. Do I or don't I? Do I stay in? Do I not? For how much longer? That's why we like to inform those decisions first and foremost by your market posture score, which is what we do every Sunday. Speaking of, for those who didn't attend, let me just diverge quick. You'll find I have significant bouts of ADD as we talk, and you kind of just, like me, have to suffer through it. So we're just going to diverge real quickly, remind you that we have seen the strength of this market the same way for literally going on 2 straight months. Nothing is surprising us. Nothing has concerned us. We've flagged a couple of things. A couple of times where the VIX was like, ooh, what's going on? We didn't like the way the dollar had pushed to the upside a little bit. Never good for a strong trending dollar. Is never good for the market. So, okay. Those things seem to have, we'll look at it, but they've eased back. All systems are go. If you're waiting, I want you to tell me, what are you waiting for? If you say, I'm just looking to get more comfortable, great. Then you should be paper trading the hell out of this market. If you see it, trade it. See something, trade something. That's the policy here. Yeah. Even if you're doing 3 from the same group, fine. It's good practice. Good practice setting stops, determining position size, thinking about reward to risk, managing the trade, right? The best way to learn is to do. And I would say right now, I would say overall, one of the biggest things that people do is they're like, well, I don't want to paper trade without knowing. Of course you do. So if it's like a flight simulator, go forth, try some things. What can you always do? Hit reset. Now I'm going to do it for real. And then eventually you're going to do it for real and you're going to replicate it. And maybe when you go live for the first time, maybe you only do one contract. One contract, you can keep your risk levels literally around $50 to $80 per one contract. If you want, and I would say this is a good way to transition. There's a lot of times where people will be like, here's another bit of advice. Whatever your live trading account is going to be, I want you to figure out how to adjust your paper account to that size. If you're going to be trading with a $20,000 account, go change your paper account to a $20,000 account. I don't know if all paper accounts can do it, but I definitely know Thinkorswim can do it. So there you go. But if it's a $5,000 account, paper trade $5,000. What I've seen is people will go and they'll do a live account with $100,000, which is standard, or $50,000. And they'll do things like, oh, I'm position sizing. Well, 2% of $100,000 is $1,000 or $2,000. That might be 40% of their account. That doesn't make sense for them to like feel that and watch that. That's not what it's going to look like when they're doing it live. They need to see it and look at it when it's live and try to process it. So you're like, how would I feel if this is what was happening? So a lot of people are like, oh, I don't get anything from paper trading. Well, it's like if someone went to the to the practice range and they just dropped the whole bucket of balls and just started like chopping at it, right? And they're just swinging at it. And then they walk away like, I didn't get anything from this. Like, what did you try to like practice exactly the way you're going to do it live and aim for a target and adjust and make some, did you do anything to make that a learning experience? The way we practice is the way we play. That's what I would coach when I was coaching my kids in sports. It's the same thing with this. The way you practice is the way you trade. So if you paper trade and you take your eyes off of it for a few days and you come back and you're like, oh, look at this thing's up. I'm a genius. I promise you, this is exactly what happens. I'm a genius. Look at I'm ready to go live. Well, when they go live, they didn't take their eye off that trade for 6 days. They watched it like a hawk because skin is now in the game. And when that thing shook a little bit on day 2, oh my God, it's going down. I'm out of here. They get out. Now they get out. They take a loss. It turns around, skyrockets. And now what? You're like, oh, I'm so frustrated. And now you start those cycles of frustration that we don't want that kind of a paper trade to live trade transition. Start the paper trade exactly what it's going to be. So when you go live, and even when you go live, you have the ability, like I said, to just do the bare minimum one out of the money contract. You can manage that trade like you would any other trade, and you can get skin in the game so that you can see, let's get 10 trades under our belt to see. Right? And like I said, this is just for beginners. If you're already trading live, you might think, oh man, that would have been helpful. Put that on there. If you think, I think so. I would have loved if somebody would have been like, do this. Don't go blow up an account and be like, oh, I need to feel it. I don't paper trade, right? Have the ability to learn from that experience. And so that's what's important. Okay, let's go look at some more trades. This is one that people may still be in. I would expect not. Possibly. If you look at these, this is where you can see the Heikin Ashi candles. Momentum, momentum, momentum. Now that's just a transition. And that's a transition. What's the difference in Heikin Ashi? So these candles here, where you can see shadows on both sides, those are what I would consider transition candles. You're going to tend to see those, right, in periods of transition. These candles here are momentum candles. They are differentiated by the size of the body and no shadow on one side. So when it's momentum bullish candles, there's no shadow on the bottom. Sometimes they sneak in and you have to be careful with those. And when they're coming down, it's the exact opposite. Those are momentum candles. Those are actually signifiers that help us to recognize when we've moved out of stage 2, developing into stage 3 momentum. When it hits the momentum stage, we get to do different things. We get to start tightening stops, taking risk out of the trade. As it moves into the momentum stage, we start thinking about pulling a little bit of profit off to just ease that pressure. So right now, it hasn't gone wrong, but it definitely seems to be veering that way, if that makes sense. So whoever had the Heikin Ashi question, tell me if that makes sense. Football said no Fibonacci lines or... Yeah, not for me. I mean, Fibonacci lines are certainly... Now, those are not a study, football, right? That's not a study. You have to draw those lines first and foremost. Then you have to then read the implications. Now, if I were to use Fibonacci... Here's what I will tell you, though. People often will be like, you don't use this? There is way more that I don't do than I actually do. Right? Remember what I said about my chart. Keep it clean. Keep it tidy. If I go into these studies and I edit what's available to me, this is the list. This is the list that I don't use. I don't use ADX or APTR. Or acceleration bands, or advanced decline, or adaptive exponential moving average. I don't use the Alpha Jensen. I don't use the band pass filter. I don't use, right? Do you see my point? This is the list of what I don't do. It's very, very difficult to explain what you don't do. Now, if someone says, what do you think about Fibonacci's? Sure. What do they give us? They give us a wide range of potential. That's it. They work like magic because there's 5 different places and it's very easy to manipulate your perception. So they are actually considered a drawing tool. And this is I want retracements. I'm going to start from the top of the move that I'm looking for the retracements on, and then I'm going to come back to the bottom of that move. And now I have Fibonacci retracements. I can zoom in on that. And you can see that right now this is moving towards anything between the 78 and the 30 and the 62, I would consider bull flag territory. So when someone's like, this is between the 78 and the 62, I'm saying, this is bull flagging. We're saying the same thing in different languages, right? We don't want to overcomplicate what we're doing here. We're saying the same thing, and what we're talking about is this thing made a move up to a high. It's actually not a higher high. It was a lower high, to be fair. It didn't regain its prior high. So that actually, to some extent, tells us, be a little cautious. But let's give it the benefit of the doubt. And we're saying on this pullback, we're thinking to ourselves, as long as it doesn't, and some people draw the line at the 50% retracement. As long as it bounces from there, it's bullish and they love what they're expecting. In this area, it's a little bit more iffy. At this point, we start thinking that's more consolidation, and if it gives it all the way back, that's a full retracement. That's how fibs work. You have to decide what are you looking to measure a retracement on, and what it's giving you is it's giving you these 5 intervals throughout this to map out where the potential pullback is going to be. Fibonacci's. I'm actually going to remove those drawings. Yes. Let me know if you have questions about that. Please. And here's the thing. I'm not trying to downplay them. We put them on AVGO. I think they're still there. No, I removed them. Or are they hidden? Actually, let me see. Did I hide it? Drawings? No. I thought maybe I hid them. I swear I had fibs on here. Yeah. But it was like a it was coming back from here. I think I had like this. I think I had this. And what do we have? 50%. That's what it looked like. And so right now on this, I'm saying, hey, look, it could pull back to this 62 level and find the next bounce up. I'm going to leave these here now. Fibs. Amazing. Let's keep going. Where were we? Costco on the list. Let's get through this. Okay. I'm going to get through the list, and then we're going to take a break and then move to the intermediate session and just kind of give it a quick break. Yeah, let's go. Costco on the list looks strong, higher high, pulling back, right? We're seeing the things that we want to see here, just looking for a little bit more price confirmation. Here's the Dow. Dow is strong today. I don't know. I mean, we've been looking at the strength of the Russell, but all of a sudden the Dow's moving. Remember, we tend to view Dow strength as more defensive. I think it's still going to be significantly less than the Russell, but we'll see what it looks like on the weekend. Gold and copper, a little bit of a pullback there. Bitcoin also rallying from the same basic news. There's gold moving to new highs. Google on the list. Right? What are we looking for? Strong trend, higher high. Pullback. What's the only problem? Earnings. You either decide to hold through earnings. I'm not going to. We may not have time. There's just not a lot of time. I think we have till the end of this day, but it would need to give a signal quite soon. There's the look at that. That's stronger than the Dow, I believe. Home builders are same thing. Came out of nowhere. There's really nothing you would have done to necessarily have that on. Coke. Showing some strength. Meta, it's a little strange for me. It broke the 50. It kind of broke these old lows. It has more time before earnings, but this was unexpected weakness. We'll keep an eye on it. If it recovers quickly, if it gets right back on the other side of the 50, I'm going to be okay with it. But if it starts to just linger, you will notice that this old set of highs is still intact, but we are taking this level out and the 50 out. I don't love that. Just something I'm mindful of. It's not like, hey, let's take it off the watch list. I'm mindful. MFC, put it on the list. That's a nice financial. New high, starting to pull back, moving into setup position. Plenty of time before earnings. MMM, kind of flat. Morgan Stanley, waiting for earnings. Microsoft on the list. That's a beautiful tech leader. New high, pulling back. Do we have time? Yes. An extra week. So we should have plenty of time to catch a trade there. Micron fell apart. Never moved. So that was one that we had tried. Didn't materialize. Small loss out of the trade. No problem. Netflix, I would say it's viable other than the fact that earnings are in 2 days. NVIDIA on the list. Now, some people are concerned that it is below the old high. If you've ever heard of a term triangle in trading, we have that type of a pattern. That is a consolidation, but it is considered a continuation consolidation pattern, meaning moving in the direction of the prevailing trend. So I'm thinking if it's going to do that, I would like to catch it here to catch the breakout to then have this move. I think this looks amazing. So NVIDIA is on my list, which means we'll probably see Palantir. I don't know, not quite yet. I would imagine TSM is going to be as well. TSM on the list. Ooh, but TSM has earnings, so I'm gonna withhold. Here's the dollar. You can see why I'm glad that we remember what I said. I want us back below the 50 and then holding below the 50. Both of those things are happening. But ooh, what's with the VIX? The VIX just won't give it up. Remember our previous patterns of peaks and troughs. Boom, boom, boom. We're wondering, is this going to be the next lower high? When that comes, I'm actually looking for increased bullishness even above what we have now. Seeing a market like this is very, very bullish. That's going to actually improve our posture. That's what it would take to raise it up and push it into the sixes. So I think we're closer to that than we are anything else. Walmart definitely looks viable, much like Costco. Okay, so let's take we only took 3 extra minutes. Let's take a few minutes break. I'm going to pause. I'm going to stop this recording so that I can post the beginner separate. This was more for that. Now as we get into advanced, it's not. I don't even want to say advanced. Intermediate, beginners, please stay. Because what we're likely to do is build a trade. That's not an intermediate concept. It's just a continuation. We may build an options trade. That's what would make it more advanced. But here's what I'll tell you. We'll always build the stock trade first. You can't trade options without knowing how to trade stock. That's the fundamental building blocks. So I hope that makes you comfortable to stick around. Let's take a quick break. When we come back, we'll flesh a couple of these out and see what comes up. Talk about it a little more. So those of you who may be ending, I appreciate you coming out. It's good to see you. Those of you coming back, we'll see you in about 4 minutes or so. Thanks, guys.